I want to show you one of my favorite types of trades. Let's say, for example, you're having a kind of a slow day, or maybe you've taken some losses. I want to show you a trade that has a high level of probability associated with it. And this is a British pound 15-minute chart. You see this vertical line here represents the new day. So the market moves into the new day. And in fact, let's pull up our pivot points on this day. By the way, I always get the question which charting I use here. And this is Fibonacci Trader software. Just go to FibonacciTrader.com and tell them I sent you, and they'll pay me $5. But you can get a trial on it, and it's very good software, and it's inexpensive. It's only $55 a month. First of all, you should go with what's free, IT Finance Charts, or maybe a chart from your brokerage firm. But if you have to pay, this is one of the less expensive ones in comparison to, say, TradeStation or eSignal. We are currently above the central pivot for the day, and we've entered the new day at the black line. We're above the central pivot. Price has moved from 96.25 to 80, all the way to 80, back and forth, and now price starts to move down. As price is moving down, look at the reaction we got off these lows right here. You see these lows? Let's take the low of this candle, 96, to the close of 16. So a 20 pip bounce from this low just to the close, although it probably went higher. It actually went as high as that one there. So the 18, it went to 18 for sure. But as price is moving down, you should be eyeing this previous day's low right here. And look at this. It comes down, then it rejects, and it doesn't get all the way there. Now you have to wait patiently to see what's going to happen. And interestingly enough, now we're getting late in the day. Traders are starting to go home, and as liquidity starts to get thinner, if we start to make a run at these lows, get ready to trade it. So the market is making a run at the lows late in the day. Liquidity is drying up. It is unlikely that traders will start to commit and hold below this low. Now look, boom, 95.60. It's actually 57, I think, 58. This one was maybe 57, low 58. This one was 57 because I traded this. That's why I know. I got to fill 65. Price consolidates. Now, the longer this consolidates and it holds, and if it continues to trade above, then we are going to get a nice release here, which I already know what happens because I was in the trade, and I'm still actually in this trade. This could be somewhat agonizing for some people. Then it finally releases. Once it releases, that's when you move your stop up, once price starts to release in your favor. Even just as price just jiggled around here, this high right here was 72. So we traded like right around in the dealing spread here for a while, but then it finally released, and it released up to as high as 94, and now is actually, I'm sorry, yeah, I forgot. Above my first profit actually was at 95, and we moved above, but we now consolidated back down, trading at 91. And now we're in this consolidation. I actually anticipate that this could be a medium to longer term low, and we could see a further leg up, which is why I still have 20% of my position remaining in this trade. But look at the previous day's low. What's interesting again about the characteristics is that a lot of the battery has been used up here. Prices moved down. It didn't get there all the way. Now more dealing flows come back up and then come down again late in the day. This is good because if it went down there earlier, it would have been not quite as high a probability as when it came down later in the day. Then we had to sit on it for a while before price released. As well, our RSI is just touching the oversold level here, whereas it wasn't over here, because this is a big stones entry that we're using here. This fine line here is S1, and here's your central pivot, and price moves back toward the central pivot.